See this dotted line? That's an alarm for me. If we get above that line and stabilize above that line, then it's over. It's rocket ship. So if unemployment number comes out very high at 4.3% and the market breaks that line, then I'm thinking it's over. Stocks up, gold up, dollar down, bonds up, it's off to the races.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning. I'm Vince Lanci, and it's Friday. Today's market rundown. We will talk about the non-farm payrolls or unemployment numbers that are coming out today. They're very important for a number of reasons. One is they will be the focus of how much or if Powell cuts. And number two, they are the focus of how banks must readjust their expectations of Fed cuts going forward. So that's where we are. And we're going to talk about specifically what that implies for gold and silver today. The dollar is down 2 at 101. 10-year yields are down almost 3 pips at 370. The S&P 500 is 5470, down 31. The VIX is 22, up 2. That's a big number. That's like 11%. Well, it's big. Vols are up 2, as we used to say. Gold is a little bit above unchanged after being, I think, maybe $3 or $4 higher, close to a level that's important to me. Silver is down 2 cents at 28.79. Copper is 412, up a penny and a half, penny and 3/4. Gold, silver, unchanged bid. WTI is up 10 cents after getting slaughtered yesterday, despite bullish data. Kind of like gold. Natural gas, 216, down a penny, kind of like gold used to be. Bitcoin down 214 at 55,940,902. Ethereum 2371 up 3. Palladium is down $1 and platinum is up $6. And grains are pretty mellow. Soy 1039 down 5 cents. Corn 397 unchanged bid, and wheat down 2 cents at 574. All right. I'm going to come back to this chart in a second because that's really part of the reaction of the non-farm payrolls. So let's go to the actual non-farm payrolls question. All right. There's the front page. Breaking news, I said 733%. It was actually 601%. There were people out there that took that to heart. Thank you for Chris for doing the math that I no longer am capable of doing. You can see the rest there. Let's move on. All right. It's about temporary versus permanent when it comes to payrolls today. So to cut or not to cut is the title. Goldman Sachs, many banks put out reports for this number. And this is an especially important number for the banks because the banks have strong diverging opinions right here, all hinged on this number today. If unemployment comes in at 4.3%, then expectations of a 50 basis point cut will start to weigh into the market, which should be extremely bullish. If unemployment comes in at 4.2%, to simplify it, then the market should sell off as unemployment isn't as bad as it was last month. Now, why temporary versus permanent? Last month, unemployment rounded came out at 4.3%, and it came out that way ostensibly because there were large temporary layoffs in Texas and other areas due to hurricanes and weather. Those things have subsided, and the question is, are they temporary or are they permanent? And we can get into what's temporary, what's permanent, but it's pretty simple. About half the banks think that those layoffs or some permutation of it were temporary, and therefore they'll come back, and therefore unemployment will drop back down, and therefore the Fed won't have to cut more than 25 basis points. They're bearish on the stock market in that respect. The other half, or more than the other half, I'd say, are bullish on the stock market because they believe The temporary layoffs will end up becoming permanent layoffs somewhere in the payrolls department. And they believe as a result, the Fed will cut 50 basis points. Now, while I'm describing banks that seem to be evenly balanced in opposition, the market is very, very biased towards 50 basis cuts right now. Okay. So the market, if it doesn't get a payrolls number of 4.3%, right? Unemployment number, I should say, then the stock market should sell off. Now, there is one other number that's equally important, but it's not as big of a headline number, and that's the payrolls number. And that's actually the amount of people that are hired. And if you want to put these two numbers together, just to be wonky here for a second, if unemployment is 4.3%, stocks should rally, gold should rally, the dollar should sell off. If unemployment is 4.2%, stocks should sell off. Gold should sell off. It might not. The dollar should rally. If the unemployment number is 4.29%, then you look at the payroll number. If the payroll number is above 150,000, assume a 50 basis point cut. If the unemployment number, I'm sorry, below 150,000, assume a 50 basis point cut. If it's above 150,000, well, then assume that you might not get an interest rate cut of 50 basis points. So these two numbers kind of overlap a little bit. We have Goldman's take there for you. We'll just read this for a second. We estimate non-farm payrolls rose by 155,000 in August, below consensus of 165 and the 3-month average of 170. So far, they think non-farm payrolls will be lower than expected. So less new hires. They also estimate that the unemployment rate edged down 0.1 pp to 4.2% in line with consensus, reflecting the reversal of some of the temporary layoffs. So here we are. They think less people got hired than you'd expect, than most people do, but they think because of all the temporary layoffs being not so permanent, they believe that the unemployment rate will edge back down to 4.2%. So 4.2%, hold on to your butts in terms of stocks going down. 4.3%, it's a rocket ship. Allegedly, we'll see. So that's also the news as well. Hopefully you'll get to see this in time for that. There's the market news, and there's the data. And we have the full Goldman analysis for you there with the key charts. And here, I'll give you a little quick preview of that. There you go. You can take a look at that. And we can go to the charts now, right? All right. Charts, right? The yellow line, if you're not familiar, that's Michael Oliver's line. This strong white line, that's a line that I've been using as an area that below it on a settlement basis, really, we go down to here. And every time we go down there, we don't close down there. So anyway, let's remove those lines and put it in context of non-farm payrolls today. See this dotted line? That's an alarm for me, right? I'm a little bit short the market. If we get above that line and stabilize above that line, then it's over. Then it's rocket ship. So if payroll numbers come out, if unemployment number comes out very high at 4.3%, and the market breaks that line, then I'm thinking it's over. Stocks up, gold up, dollar down, bonds up, it's off to the races. If unemployment number hits 4.3% and gold doesn't get above this line, I'm cautious, meaning as a bull, I'm cautious. If for any reason, whether the number is good or bad, if we get below, say here, I'm worried as a bull, right? Below here, it shouldn't get below here unless the unemployment number is below 4.25%. It should not get below this line. If the unemployment number is below 4.25%, then it could get below that line. The fantasy is the unemployment number comes out really strong and people aren't getting fired. And the market goes back down to this area and stocks crater, but the gold market stays above this level and stocks crater. That'll tell you that everyone's rolling out of stocks and into gold. Anyway, that's it. I'm Vince. Have a great Friday, and Hope the markets are good to you.
Thanks for watching this morning's Markets and Metals with Vince Lanci, brought to you each day by Miles Franklin Precious Metals, who we encourage you to contact for your next gold or silver order. And Miles Franklin brings us a gold and silver special each week. And if you've been looking for a pullback in the rally to purchase gold and silver, this week's deals include 1 ounce silver Philharmonics from the Austrian Mint in Austria, go figure. Fortunately, these beautiful coins are only $3.10 over spot. While we still do have silver under the $30 level, which it obviously eclipsed earlier this year. And on the gold side, this week's special is 1 ounce gold Courants for only $60 over spot. Again, you can place an order by calling 833-326-4653 or emailing us at arcadia@milesfranklin.com. Happy to answer any questions you have and get you set up with whatever you need. So call us at 833-326-4653. And as always, thanks for watching. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.